All eyes are now on the Reserve Bank of India as its Monetary Policy Committee meets from today to October 1st. After three consecutive rate cuts earlier this year, totaling 100 basis points or 1 full percentage, the RBI hit pause in the month of August. But Nomura now expects a 25 basis point cut in the upcoming policy. Now, the October meeting is crucial as it comes right after US President Donald Trump's additional 25% tariff on Indian shipments and the rollout of GST 2.0 rates amid the boosting consumption. Now, SBI Research has also pitched for a rate cut, calling it the best possible option, though some experts still see a status quo to be maintained. RBI Governor Sanjay Malhotra will announce the MPC's decision on October 1st, with markets closely watching for cues on growth, inflation, as well as the impact of global challenges. Teresa John, the Deputy Head of Research, as well as the lead economist at Nirmal Bang, joins me this morning. Teresa, good morning. Thank you so much for your time this Monday morning. Help us understand, it's not just other agencies, even Nirmal Bang is expecting a 25 basis point cut on October 1st. Why so?
Yes.
All right, there seems to be some connection problem there with Teresa John from Nirmal Bang, who will join us shortly. But here is what we know from Nirmal Bang's expectations. Nirmal Bang is expecting a 25 basis point rate cut on October 1st. And this comes primarily on account of downward revisions in CPI inflation print. Now, there's also likely to be the tariff impact, which should be weighing in on Governor Sanjay Malhotra's mind, while some reports, including the one by Nirmal Bang, suggesting that the tariff impact, which is highly negative on the Indian economy, may partly be offset by the GST rate cuts that we witnessed commencing on the 22nd of September. But the challenge of external headwinds continues to pose downward risk to growth. Meanwhile, the long-term inflation is expected in the range of 4 to 4.5%. Remember, in quarter one of this financial year, which is the April, May and June period, India witnessed growth of 7.8% on GDP. So while growth pressure could be challenged by external headwinds, including those on account of tariffs, there is a chance that lower inflation, targeted perhaps now at about 2.5% or so, given the healthy monsoon situation, may prompt the Reserve Bank of India to go ahead with another rate cut of about 25 basis points. Let's see if we have Teresa John, lead economist of Nirmal Bang, here with us. We are setting her frame and hopefully she should be here with us in just a little bit. But on your screens right now, you've seen the expectations which are coming from multiple agencies, including Nirmal Bang, that October 1st, just 2 days from now, we could see another 25 basis point rate cut. Now, inflation has been under control and growth projections have been fairly robust in the last quarter. And Q2 may have seen a little bit of a shock on account of tariffs, but Q3 is when the real growth is expected on account of the GST cut. We've seen the auto sector rake in demand on auto sales, car sales like never before, and also other consumer durables like air conditioners, refrigerators, as well as televisions are seeing a healthy demand. So Q3 could pretty much be in line with Q1. But from there, how is the journey going to pan out? Let's discuss that now with Teresa John. Teresa, a 25 basis point rate cut expected on October 1st. What are you picking up? Why do you think the RBI will go ahead and cut rate again?
Yeah, so we are expecting a 25 basis point rate cut, mainly because inflation is likely to be revised down. So we think the RBI started with the 4.2 forecast in February, and now we're at 3.1%. That could get a further downward revision in this monetary policy on October 1st. So that is why we're expecting a rate cut. In addition, the GST rate cuts are also disinflationary. So according to our estimate, there could be a 60 basis point downward revision to the, because of the GST rate cuts, there could be 60 basis point disinflationary impact because of that as well. So overall, put all of that put together, plus rate cuts from the US Fed, mean that you could actually see a rate cut from the RBI on October 1st.
Sir, your outlook also suggests that the tariff impact, which is largely negative for the Indian economy, may be partly offset by the GST cut. Now, we've seen Q1 healthy growth in Q1 as healthy as 7.8% growth. Q2, we don't know what those numbers are going to state, but Q3, again, with the GST cut, is likely to be a robust quarter for India's growth. At a time like this, is there need for RBI to push for more growth, more capex investment by the private sector by cutting interest rates?
So the tariff will have a negative impact on inflation by around 45 to 50 basis points for FY26. The GST rate cut will only partially offset that. I think there is a need to support growth, crucially at a time when global central banks are also doing the same. From that perspective, I agree with you that the first quarter numbers have broadly held up, but that is also because of lower inflation. Your real GDP numbers are looking high. If you look at nominal GDP growth, that itself is under pressure. It was at 8.8% in 1Q, which is far from optimal.
All right. And external headwinds, are tariffs the only external headwinds that one should factor in right now? Or is there something else with respect to potential hike in gold prices that we've seen, potential pressure coming up on oil prices in case the Russian oil purchases by India were to come under some sort of a negotiation and India would potentially cut, if at all that scenario arises, then are tariffs the only external headwinds that one should factor in right now, or could there be more?
To start with, on gold prices, because of the global uncertainty, gold prices have been moving up. Unlikely to come down unless the global uncertainty settles, and no one is expecting that in the near future. So there could be some upward pressure from gold prices, but I think the RBI will largely look through that. If you look at core inflation, which is excluding the impact of gold and silver, it is actually at around 3.1%, very benign. On oil prices, even if India does stop Russian oil purchases, I don't think oil prices are going to go up very significantly. Largely, oil prices are holding up because of the supply cuts. Global demand is not that good. So I don't think there is any significant pressure that you will see on oil prices. It's largely likely to remain range bound.
All right, so no external shocks as far as oil prices go. Teresa John, thank you so much for your time this morning and for joining us here on News9 to put the RBI Monetary Policy Committee and the expectations from it here in perspective. So remember, October 1st is when we will hear from RBI Governor Sanjay Malhotra, and potentially a 25 basis point rate cut could be expected. But will he go ahead and bite the bullet? We will get to know only on October 1st.